Hey everyone, and welcome back to All About AI Tech. Today, we're diving into the heart of the AI revolution, semiconductor stocks. And there's one company that's absolutely crucial to this whole story, TSMC, or Taiwan Semiconductor Manufacturing. Now, you might not know them as well as Nvidia or AMD, but trust me, they're the backbone of the AI chip industry. TSMC is the world's leading chip foundry, meaning they manufacture chips for a ton of different companies, including some of the biggest names in tech, like Apple, Qualcomm, Nvidia, and AMD. Imagine a world without TSMC. Basically, most of the technology you use daily wouldn't exist. They produce advanced chips that power everything from smartphones and laptops to servers and AI accelerators. What makes TSMC even more exciting is their focus on innovation. They're constantly pushing the boundaries of what's possible with chip manufacturing. For example, TSMC achieved a 90% market share in manufacturing the most advanced processors in the world. This leadership further paves the way for a strong 2025 for TSMC, with analysts predicting a 25% revenue growth. More revenue means the company will invest more in R&D, ensuring they stay at the forefront of what is possible with chip manufacturing. This virtuous cycle will be key for TSMC and its investors. Now, let's talk about a name you're probably more familiar with, Nvidia. They're the undisputed kings of GPUs, the processors that are essential for AI training and development. Nvidia's growth has been nothing short of phenomenal, with their stock price soaring in recent years. A lot of that growth is thanks to the increasing demand for their powerful GPUs. As AI models become more complex and data sets grow larger, the need for high-performance computing provided by Nvidia's GPUs just keeps going up. One analyst even predicts Nvidia could become a $10 trillion company in the next 5 years. That might sound crazy, but honestly, with how quickly AI is evolving, it's not entirely out of the realm of possibility. Nvidia has a lot going for it, including their upcoming Blackwell GPUs slated to launch next year. These next-gen chips are expected to offer some serious performance improvements over the current generation, possibly driving huge revenue growth. These new CPUs could also push Nvidia to a market capitalization of $6 trillion next year if the company can capitalize on the demand. Continued AI advances coupled with replacing general-purpose data center architecture with accelerated computing will further fuel the need for Nvidia products. Of course, Nvidia isn't the only player in the GPU game. We have to talk about AMD. They're Nvidia's main competitor, and they've been making some serious strides in the AI chip market. AMD's GPUs are becoming increasingly popular, offering a competitive alternative to Nvidia's offerings. What's interesting about AMD is that they also rely on TSMC for manufacturing. This again highlights how crucial TSMC is to the entire semiconductor industry. Both AMD and Nvidia, two fierce competitors, rely on the same company to produce their cutting-edge chips. This demonstrates the enormous influence TSMC holds over the semiconductor world, making it an investment not to be overlooked. Moving beyond the data center, Qualcomm is another name worth mentioning. They're a dominant player in the mobile chip market, and they're also making significant investments in AI technology. Their chips are powering mobile devices with more sophisticated AI capabilities. Think about AI-powered cameras and real-time language translation. It's pretty cool technology. As AI becomes even more integrated into our daily lives through mobile devices, Qualcomm will likely be another big player in this space. Another interesting play in the AI chip space is Broadcom. They're not just manufacturing chips, they're also developing software and services related to AI, making them a more vertically integrated company. They're playing both sides of the game, both the hardware and software aspects. This positioning gives them a unique advantage and a greater potential for profitability in the AI market. Now, I know picking individual stocks can be a bit daunting, especially in a fast-moving sector like AI. So, if you're looking for a more diversified approach, consider investing in an AI-focused ETF, like the iShares Expanded Tech Sector ETF. This ETF holds a basket of tech stocks, including many of the key players in the AI space. It's a good way to gain exposure to the AI market as a whole without having to pick individual winners and losers. This is especially important in AI because things are changing so fast. Today's leader could easily be overtaken by a new innovator tomorrow. An ETF mitigates this risk. No matter what your investment strategy is, it's essential to do your own research and understand the risks involved. Don't just chase the hype. Look for companies with strong financials, innovative technology, and a clear path to growth. The AI market is incredibly exciting, but it's also highly competitive. Make sure you're investing in companies you believe in for the long haul. There are risks with every investment, especially with how fast things change in the technology world. So make sure to assess your personal risk tolerance and only invest what you can afford to lose. For example, if you're risk-averse, adding TSMC to your current S&P 500 ETF could be a way to incorporate AI and technology growth into your portfolio without taking on too much risk. Looking ahead, the future of AI chips is bright. We're only at the beginning of this technological revolution, and the demand for high-powered chips is expected to grow exponentially. Companies like TSMC, Nvidia, and AMD are at the forefront of this innovation, and they're well-positioned to benefit from this secular trend. That's why I'm so bullish on the AI chip sector. Remember that TSMC is expected to double their advanced chip packaging to 70,000 wafers per month in 2025 with an additional increase to 90,000 per month in 2026, meaning they are planning on capitalizing on the increased demand. As AI continues to transform the world around us, companies like these will play a significant role in driving technological progress. Remember that the AI chip market is projected to be roughly $227 billion by 2032. Investing in AI stocks isn't about short-term gains. It's about positioning yourself for the future of technology, one powered by the incredible advancements in artificial intelligence. Now, it's important to acknowledge the geopolitical factors at play, particularly with a company like TSMC. Taiwan's proximity to China always presents a concern for investors, as well as regulations around selling advanced chip technology around the world. These are all factors that could affect the performance of TSMC stock, and it's definitely something to keep in mind. However, the geopolitical noise surrounding TSMC shouldn't deter investors, as it is still a very good company backed by impressive financial numbers. At the time of filming, Taiwan Semiconductor has a PE ratio of 28, indicating a reasonably priced stock that is poised for strong returns for its investors. Also remember that geopolitical factors could affect the entire semiconductor industry, not just one company. So make sure you stay updated on any geopolitical developments and are aware of the potential risks before making any investment decisions. I want to hear from you guys. What are your thoughts on AI chip stocks? Are you bullish on TSMC? Do you think Nvidia can reach a $10 trillion market cap? Let me know in the comments below. I always appreciate your insights and questions. And also, if you haven't already, hit that subscribe button and ring the notification bell to stay up to date on all things AI. Thanks for watching, and I'll see you in the next video.